Welcome to Deep Dive with MNCL, where we don't just discuss companies, we dissect them.
Hi, I'm Mohit Surana, Senior Research Analyst at Monarch Networth Capital Limited. Today I'm here to discuss Shaily Engineering Plastics, a globally respected supplier of high-precision molded plastic products. The engineering plastic molding industry is vast and expanding globally, helped by an increasing use of plastics in replacing natural materials without compromising a high strength-to-weight ratio. Shaily manufactures value-added products from ultra-high-performance engineering plastics that find applications in diverse sectors. Its unwavering focus on quality and compliance across its business verticals is reflected in its long-standing relationships with customers of high repute. The company has three business segments: consumer, which contributed 73% to the top line in H1 FY25, healthcare 18%, and industrial 9%. Under the consumer segment, Shaily manufactures and supplies home furnishing products, FMCG packaging, LED light casings, personal care products, and carbon steel furniture, while its industrial segment includes casings and components for electrical household appliances and automobiles. The company's crown jewel is its healthcare segment, which has a growing portfolio of drug delivery devices and pharma packaging, with contract manufacturing constituting 70% and the sale of its own products with intellectual property rights constituting the balance 30%. However, the mix will gradually become more balanced over the next 2 to 3 years. As of FY24, the company had 200 injection molding machines spread across 3 plants in Gujarat. The company invested in capacity expansion over the last 4 years and is now looking to ramp up its utilization to 60% from 40% currently. While Shaily's consumer segment is mature and estimated to grow at high single digits, the company is still poised for transformational growth given its focus on aggressively growing its healthcare and industrial segments. In the healthcare segment, Shaily is among the few manufacturers of insulin pens globally and operates in a high entry barrier segment with low competitive intensity due to the complex regulatory and approval requirements. We believe injection pens for self-drug delivery should see strong growth as demand for GLP-1 drugs for diabetes and obesity treatment gains momentum. The company's drug delivery pens capacity was 40 million units in H1 FY25, which will increase 2.5 times to 100 million units by FY27. In the industrial segment, Shaily has the competitive edge of being the only licensed processor of Toluene polymer, and this segment is also expected to register strong growth going forward. We have baked in revenue, EBITDA and PAT CAGR of 19%, 34%, 42% over FY24-27, helped by our belief of a strong ramp-up in its healthcare and industrial segments, strong EBITDA margin expansion of 725 basis points, and a fall in debt to equity to 0.19 times from 0.4 times currently. Our estimates also indicate a strong expansion in the company's ROE and ROCE from 13.3% and 16.7% to 22.5% and 27.1% respectively over FY24-27. At Monarch, we believe Shaily has credible levers for consistent high growth complemented by an improving revenue mix and return ratios. We believe such a fundamentally strong company should be viewed from a longer-term perspective and deserves to trade at a premium. We have assigned a 45 times PE to FY27 estimated EPS of Rs 35.7 and assigned an accumulate rating to the stock with a target price of Rs 1,600. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.